But then, it makes a lot of people wonder if this is going to have any effect on the already pressured earnings and profit margins of some of these businesses that actually operate here.
Certainly, with this, of course, you see, because we're still an import-dependent economy. Even those who manufacture still import most of their input materials. So you still see that the higher cost of import will affect their unit cost of production. And of course, with the fact that, domestic demand is not getting better, disposable income is not getting better, people are not being paid better salary, people are not employed in this economy, a lot of people are poor, so demand is not going to be so strong, even in the midst of increasing prices. So somehow, I believe that producers will not be able to push all the prices to buyers, at a time like this. So you expect some kind of, a sharing formula. Prices will go up, but not to reflect the full impact of this devaluation. That's what I see. So, so therefore, producers are going to take some, lower margin, thinner margin in their, trades or businesses. Okay? Oh, yeah.
You see, the inflation has gone up to 8.2%.
Yes.
Now, the currency devaluation so far, total, is about almost 15% if you take everything. So what you should realize is that global prices of commodity prices have come down by about 21%. And your devaluation is 15%. So against the dollar, this devaluation could be inflation neutral initially. But in some cases, it will go up, right? But you must understand that the euro itself, which is one of our major trading partners, has gone from $142 to a euro to 1.13. So against our trading partners, apart from the dollar, you'll find that the naira has not weakened as much as it is. So theoretically, you shouldn't have that inflation. And that is why inflation has only gone from 8 to 8.2, maybe to go up to about 9 or 10%, as against a 15% devaluation.
But if that happens, what next? Because we know that the Central Bank of Nigeria, apart from the fact that it's been trying to ensure currency stability, has also tried to keep headline inflation below 10% with the kind of policy that comes out. So if we now see headline inflation begin to trend towards 9 or even 10%.
Yeah, it will go up. It will probably get about 10, 11.
What's the implication of that?
It's not a case of death. You see, inflation of 11%, if you are growing at 6%, but now growth has been, is not a case of death. You need, there's what you call the natural rate of inflation, which you need to have some inflation if you are going to have growth. You have to stimulate growth. You can't have it both ways.
But it can't stimulate growth, because that will also mean that it will stifle it will rather affect the amount at which banks borrow. The interest rates will definitely go higher.
Like I mentioned to some group about a day or two ago, with this happening, I see some level of cost push inflation, just like I've explained. Costs of goods and services are likely to go up. But the point is that compared to the benefit of this, depletion, that's the comfort we have from not depleting FX reserve further. What pays us better? Even though inflation may go above a single digit, like you said, it's not going to be, a death situation. It's something that can manage. And I expect that, in the next MPC, I clearly expect that all the bubbles we're building through the cash reserve requirement should start getting deflated. I expect again that from the next MPC meetings that CRR should begin to come down, especially on public sector funds, because central bank believed that anytime FAC allocation was shared in Abuja, banks had a lot of liquidity with them. This liquidity, you and I don't see the money in our pockets.
That's what I'm saying. So, sorry, Mr. Odeme, Mr. Rewani, if we see all of this happening, we see, reduction of liquidity in the system, as the case may be, there will also be an increase in interest rates, which means that growth the fiscal and the monetary authorities have been trying to build for the key drivers, which is the SME, will be further stifled.
No, what you don't understand, the advantage of this new system, the interbank system, is that before this system, interbank interest rates went up to 95%. Because all of us have to mobilize our money before Monday, put it in the central bank, then do the auction, then we take our money again before Wednesday. That system is over. What you do, if Harriet wants money on Monday, she puts her money in and buys from the interbank. You don't need to mobilize money for a ceremony. What you had was an auction ceremony. It was like a beauty parade. All of us take our money down to buy whatever we want to buy. Now this is over. If you want to buy money at any time of the day, any time of night, you go onto the portal. The central bank will sell. It's a two-way quote. And so the inefficient structure that was set up with the old DAS system has been eliminated. You will see interest rates come down. And you must differentiate between system liquidity and banking liquidity. There was system liquidity, but there was no banking liquidity. So the banks were beating themselves up. And that's, by changing the system, you now see that banking liquidity and system liquidity were aligned. And you begin to see a more stable system. So all that rushing to go and take money at 95% is because of anxiety. You're afraid that if you don't buy it now, it will not be available. And now that you know that you can get it even at night by going onto online, the anxiety is, I always liken foreign exchange market to the petrol market. If you see, you're driving down the road and you see 10 cars at the petrol station, even if your tank was 3/4 full, you will run in and go and join the 11 car, and you will create more scarcity because of the stampede. But even if you are driving past a petrol station and your tank is a quarter tank and you see nobody buying and they are selling to anybody, you drive to where you're going. When you finish your party, you stop at the gas station and buy up to a quarter tank or half a tank, and you don't put pressure on the system. So pressure on the system is because of speculation, because of fear, and because of anxiety.
Okay, let's take a quick break, gentlemen. Come back and continue this conversation. When we come back, we'll look at some of the projections. The finance minister, Mr. Irwani, we were having a conversation on that, had an interview with Financial Times. And so we'll talk about some of the issues that were actually raised. You're watching Business Morning on Channels Television. We've been taking a look at latest developments on the Nigerian Forex market and, of course, how the market, as well as investors and economic managers, have been reacting to it. We'll continue this conversation in just a moment. Please join us again.